Hello and welcome to another update video about Bitcoin. So yeah, Bitcoin, not too much price movement since the last video. Today I need to be careful that my laptop doesn't melt. I've got my laptop here at the moment where I am. And yeah, it's like 40 degrees in the UK today, 40 degrees Celsius. That is quite hot, especially for the UK. I think it's the hottest day in history here in the UK. So it's unbelievably hot. We're normally not used to that in the UK. It might be completely different where you are. I know there's a lot of viewers also from Dubai and much hotter areas in the world. Even Las Vegas, we have a few viewers. But yeah, for UK that is quite hot. So my laptop has not melted yet. But for now, we go with it. Right, we continue to be in this bear flag. So again, I'm going to show you the bearish and the bullish possibility. The bearish one remains my primary expectation as we have not broken above 23.3k yet. That is still the level that needs to be broken for me to consider making the bullish scenario my primary expectation. However, even if the bearish one is primary expectation, the probability for a bullish breakout is of course not zero. And I think, you know, we have good chances for a breakout, even though I just can't because the uptrend, the overall higher level uptrend just hasn't started yet. I cannot make the bullish one the primary expectation, but the opportunities are there that the low is already in. Yeah, there are a lot of indicators screaming that the low is already in, so we need to be ready. Yeah, we need to be ready. Don't be surprised if we suddenly get a breakout, and don't try to fish for the low. At least I don't try to. So because if it starts running, I'll tell you that if it starts running, you'll see 10-15% profits in a day for some coins, and that is when people panic. Okay, so that's why I try to be in the boat before it leaves the harbor. Okay. So bearish scenario here, still in the bear flag. Yeah, we have not broken out of it. We are still on track here for further price decreases. For now, we've got a WXYXZ pattern. That's a 5-wave move, but basically each of these waves has 3 waves within it. So it's a corrective wave pattern, and that corrective wave pattern would break out to the downside. Someone else, I read it briefly in the comments. I still try to read all comments, believe it or not. So sometimes I can't answer, reply, but I still read, let's say 90% of all comments. So if you leave them, I always read them. So someone suggested it might be a WXY, but the Y wave, yeah, it's just a massive one. To be fair, that's possible. I don't see though how that would be different from a WXYXZ pattern, but you can, yeah, it would be that. To be honest, I haven't looked too much in detail too much. It doesn't make a difference for the imminent scenario anyway, but it was just an interesting thought. Yeah, but here in this bearish scenario, I would expect the breakout to the downside. As I said in the previous video, best indication that this downtrend is actually starting would be a move below 20.7k, and even better would be a break below 20.5k. Then we can be more certain that this is starting, but the real confirmation would only happen before the low of the wave X, in my opinion. That's at an 18.9k. At that time, we will have also broken out of the bear flag. Now, the bullish scenario. We'll get to that in a minute. A lot of questions, because I've obviously switched to bullish for ADA, and I've flipped to bullish for ETH as primary expectations. A lot of questions. What happens if Bitcoin now makes a lower low, goes below 17.6k, in line with my primary expectations? Wouldn't that bring the whole market down? With the highest likelihood, yes, of course, it would bring the whole market down. However, 2 things. One point is, coins have decoupled before from Bitcoin. So just because it brings the majority of the market down, coins that are currently already starting the breakout, they might not be affected that much. That's the first message. We've seen it many times before where coins completely decoupled from Bitcoin. Yeah, completely. So they are not always all moving with Bitcoin. I've got tons of evidence, tons of charts that move differently to Bitcoin at different points in time. They always come back to Bitcoin at a point, but there have been tons of examples where coins have decoupled from Bitcoin. So just because the entire market or the majority of the market is being pulled down by Bitcoin doesn't mean all coins are affected. Therefore, it's always useful to analyze charts individually and not look at correlations. I don't like correlations. They come and go. They are not reliable. Yeah, a lot of people always look at the Nasdaq, the S&P. Yeah, but you know, if I analyze the Bitcoin chart, why do I need the S&P, right? So this is always, correlations come and go. Now the other point is, even if it brings the entire market down, however, the more distance, for example, Ethereum, Matic, Quant, and some other coins that are breaking out, now bring between themselves and their lowest low they've made recently, of the current correction, the more distance they bring between the current price and that price, the more likely it will get that in a Bitcoin drop, where Bitcoin might go down to 16.9K, for example, these coins might just make a higher low. Okay, so they might just make a higher low. They might now do their first wave up, and they will come down in their second wave when Bitcoin will only finish off the correction. Okay, so hopefully that was clear. I hope below this video not to see that question, and there will probably be the odd one. But yeah, this is certainly still likely that we make another low for Bitcoin. For now, we can also track it bullish. On the bullish scenario, there's a few options to count this. Important fact is we're currently holding above the 21.7K level. That is important to hold in the bullish scenario. I mean, below 18.9K, let me just switch that phone off. So below, sorry, don't want to cut that out. Below 21.7K, we, below the low of that higher level wave 2 down there, below 18.9K, yeah, the bullish scenario would for now be invalidated. Yeah, I mean, you can still find another way to make it work, but it will just make it very unlikely then that we are still in the bullish one. Okay, it will just put more emphasis on the bearish one, which is at the moment anyway the primary expectation. Above 23.3K, we can make the bullish one primary. At least I want to see it fulfill an impulse, and the structure needs to be okay, but then I will consider that. Two options here for now. Here in this option, we are going to go up in a fifth wave and finish off this wave there. That would take us above 23.3K, most likely. In the more, let's say, more short-term bearish option, we have already seen here a wave 3. This was a wave 4 here, and we've seen the fifth wave here. So in that scenario, we would have had a wave 1 to the upside and will now enter a wave 2 correction. Now, this wave 2 correction, we can also take a look at that from a Fibonacci retracement point of view. And let me just put the retracements here on the chart. And sorry if you hear the phone ringing again, but I'm not gonna cut that out again. It's just too hot for that. See, the laptop might be melting already. It doesn't do the retracements anymore, but doesn't do anything anymore. Just try that again. No, you know what? Now, see. Don't know what I did here now. So let's check the retracements. So where we could come down in this wave 2 then, let's look at the fib levels. They're gone again. I think I'm offline. See, it's the heat. It's the heat. So let's just finish this video off before I melt. Yeah, we could come down here into the region here. 50% fib retracement, 20.9K. to the 61.8 at 20.5. I would say between 20.9 and 20.5. That would get likely if we go again below 21.5. Wouldn't get too concerned about that, as long as we are sort of holding here the 20.5K level, because in the bearish scenario, that would again put more emphasis on the bearish scenario. So again, it just remains important to go above 23.3K, and for now to hold here 21.7. If we do that, then we could move up straight away in this fifth wave, which I've showed you, and that should take us above 23.3K. So again, we're here at a key decision point. For now, it remains interesting. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.